I'm Kalilah Reynolds, and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my website, KalilahReynolds.com, to subscribe to our newsletter. And while you're there, you can check out our other financial news and videos. You can click the link up here or in the description box below. Now, come on, let's get this money.
First up, the highly anticipated additional public offer APO from Sygnus Credit Investments is finally here. We'll hear more from co-founders Berisford Gray and Jason Morris. And later, the analysts weigh in on the latest market developments. What do they think about the Sygnus APO? And overseas, shares of Airbnb have surged on their first day of trading. The home rental company is now worth over $100 billion US, making it the biggest US IPO this year. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Sygnus Credit Investments Limited is seeking to raise up to $4.8 billion through its additional public offer APO, according to its recently released prospectus. The company is selling at least 196 million ordinary shares. The cost is $16.30 for its Jamaican dollar shares and 14 cents US for its US dollar shares. However, you'll have to get in early if you are not already a shareholder, as 90% of the shares are reserved for existing shareholders, team members, and key investors. Existing shareholders as of November 20 and team members get a discounted price of $14.70 JMD or 12 cents USD. The APO is scheduled to open at 9 a.m. on December 18 and close at 4:30 p.m. on December 23. It could close earlier if fully subscribed. The company reserves the right to upsize the offer by a further 82 million shares. Sagicor Investments Jamaica and NCB Capital Markets are joint lead brokers. Sygnus says it intends to use the funds raised from the APO to pay down on a loan and complete more investments in its timeline. Check out our other videos on Sygnus. You can click the link up top or in the description box below. Rating agency Standard & Poor's S&P maintained Jamaica's credit rating at B+ last week, but said that the rating could be lowered within a year if the country does not grow. However, S&P still expects the Jamaican economy to rebound next year. At a press conference last week, Finance Minister Dr. Nigel Clark said he expects the economy will start growing again around April. He said S&P's rating is a sign of confidence in Jamaica. The Jamaican economy has shrunk 10% over 9 months between January and September, due mostly to the fallout in the services sector, including tourism, that has been heaviest hit by the crisis. Meanwhile, Minister Clark says government revenue remains on track despite the pandemic. Two major initial public offerings IPOs hit the US market last week with strong performances in their first day of trading. On Wednesday, food delivery service company DoorDash closed 85% higher in its trading debut. The company sold its shares at $102 at the start of trading and closed the day at close to $190. Meanwhile, online vacation rental company Airbnb also jumped 112% during its first day as a public company on Thursday, after listing its stock at around $68 per share for a valuation of $47 billion. Stay tuned as the analysts will be discussing the Airbnb IPO later in the show. Still in the US, Facebook may be forced to give up Instagram and WhatsApp. The Federal Trade Commission FTC, as well as attorneys general from 48 US states and territories, have sued to break up the Facebook giant. This would force them to give up Instagram, WhatsApp, and other assets and turn them into independent businesses. The lawsuits claim that Facebook is abusing its position as a monopoly. Facebook's share price fell by much as 4% after the news. Back home, small and medium-sized enterprises SMEs opening business accounts at First Global Bank are being offered bundled e-commerce services to help their business easily transition to a digital platform. The initiative aims to help SMEs pivot in the COVID-19 business environment. FGB Vice President for Personal and Business Banking Arlene Williams told the Jamaica Observer recently that the bundled services began rolling out in October. FGB says while the initial take-up has been slow, it has seen an increase in inquiries and requests for point-of-sale POS machines, including the mobile ones. And NCB Capital Markets will be opening an office in Guyana. A decision spurred by the robust business there in the past few months, with their new oil industry. At present, NCB Cap Markets services the Guyanese market remotely through its southern hub in Trinidad and Tobago. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
And when we come back, Sygnus Credit Investments is seeking to raise nearly $5 billion. Is this investment right for you? We'll find out more. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. Sygnus is coming to the market again 2 years after its successful IPO. The offer opens December 18 and is scheduled to close on the 23rd. Joining us now is CEO and co-founder Berisford Gray and Executive Vice President, co-founder and Chief Investment Officer Jason Morris. Hi, Beris. Hi, Jason. Welcome back to you, Beris. You were on this program almost exactly a year ago.
Yeah, thank you very much. And you're absolutely correct. It seems as if we like to touch base just before the Christmas and probably say bring great joy and tidings.
At the time you broke the news on Taking Stock that you were planning this offer, at the time you thought it might have been a rights issue, but COVID-19 had other plans, huh?
Absolutely. You know, we got set back a little bit by COVID, because we were actually planning to do this capital raise in March of this year. But as we know, COVID has caused a lot of disruptions. But here we are, you know, in true Sygnus way, overcoming challenges and ready to go.
So what has the last year been like for you guys, Jason?
It has been a great year, challenging, but great at the same time. We have been, you know, just quietly building up our track record and reputation in the alternative investment space. And so we are here now, ready to bring Christmas joy to shareholders, existing and new shareholders as well.
All right, so before we get into this actual offer, the APO, for those who are new, for our newbies who are watching for the first time and just getting interested in investing, tell me, and they've never heard of Sygnus Credit Investments before, tell me what you guys are and how you make money.
Okay, so Sygnus Credit Investments is a private credit investment company, which simply means that it takes shareholder capital and deploy that capital across the Caribbean into medium-sized businesses, and it does this using private credit instruments. For want of a better term, instruments that effectively return cash to Sygnus Credit Investments Limited for, and I'm going to use this term very loosely, for lending money to those companies.
So you're kind of like a bank.
You could say we are kind of like a bank, but not quite. The difference is a bank takes deposits. Obviously, Sygnus Credit Investments Limited raises equity capital and then deploy that capital into investments, which are private credit investments. The way that shareholders make money from this is Sygnus Credit Investments Limited pays out up to 85% of all the interest income that it earns back to shareholders. So it's kind of like having your cake and eating it at the same time.
So you guys are a very good dividend paying company. I saw that you pay out 85% of your profits in dividends to shareholders.
Yes, we tend to reward shareholders for their patience.
So tell me, Beris, about the types of companies that you have invested in so far.
We have invested in a wide cross-section of companies across a wide cross-section of industries, to be specific, about 11 industries. And these companies are companies operating in energy, operating in the mining and aggregate industry, operating in financial services. We also invest in companies that are distribution companies, energy storage companies, you know, so it's a wide array of manufacturing companies, for example. So it's a wide cross-section of middle sized companies that are really trying to either grow their business organically or trying to expand by driving new products, enter into new markets, or acquire new businesses. So
But
we try to.
you specifically look at medium-sized companies to invest in. Why that profile?
A very good question. When we started Sygnus a few years ago, we looked at the market and try and determine where was the gap, which set of businesses that has great potential needed access to capital in a more customized way. And based on our research, we realized that middle market companies are well positioned to grow. Most big companies were once middle market companies, but in the Caribbean, they are not accessing capital in customized way, which is aligned to their growth strategy. So hence we decided that that's the niche that we need to focus on. These are the businesses and entrepreneurs we need to help to drive not only the growth of their business, but also the wider growth of the economies across the region.
Right. And I noticed too, though, that about 21% of your portfolio is in hospitality and entertainment combined. And those two industries have been hit very hard by the pandemic. I remember, I think it might have been earlier this year, you acquired Aruba Wine and Dine. So how has the pandemic affected the ability of those companies to repay you and us shareholders?
Okay, good point, right? So just first clarification, Aruba Wine and Dine is in a different portfolio company, which is Sygnus Denim, which is a private equity firm. So in terms of our exposure to hospitality, the majority of our exposure there is actually to the sub-industry of adventure tourism. And our exposure in adventure tourism, majority of our hospitality exposure is actually in adventure tourism. And that exposure is to companies that are actually market leaders in that segment of the industry, one. Two, those companies have actually been on an acquisition binge. I think since COVID started, they would have made combined 2 to 3 acquisitions and are in the process of making another acquisition, which we are also looking to play a part in. So obviously you make acquisitions from a position of strength, and therefore we're not worried about our exposure in that segment of the hospitality.
Can you say which company that is?
No, it's called private credit for a purpose.
Oh.
So, yeah.
But adventure tourism, that's not happening right now. That's pretty much flat. No growth, not even growth. It's just nobody's doing that right now.
Right. So the point I was making
that industry is closed.
It's not closed. It's not closed. Obviously, industry is severely impacted. But the point I'm trying to make is that if you're a strong player in that industry and you have the capital to actually acquire other companies, meaning you're increasing your market share during a period when the market is down, when the market comes back, what is going to happen is that you're going to have a substantial, larger share of that market and make a lot more revenues and profit than you did before. And during the middle of the pandemic, that is exactly the time when flexible financing is required to assist in making these acquisitions, because you can actually acquire businesses at a cheaper multiple than when the market is doing very well. So that's the first part of our exposure, and the majority of our exposure is to adventure tourism. The second exposure that we have is to a hotel in Cayman Islands. And if you look at what has happened to Cayman, they shut down everything until they got to a stage where they had no COVID, and then they reopened in September. So the hotel that we are exposed to in Cayman did a number of things during the crisis, which speaks to the type of companies that Sygnus Credit Investment actually invest in. First thing that happened, the shareholders injected additional equity capital into the hotel. Second thing that happened, they renegotiated and got a new branding contract from a global hotel operator. And as a result of those first two things, they were able to renegotiate their senior bank debt. So what does all of this mean? This means when you combine all three things, that hotel does not have any working capital pressure. In fact, the new contract that they negotiated actually allowed them to get up to 200 hotel rooms in terms of new occupancy heading into the start of the winter season. So much so that we don't have any issues with their payment as of next quarter. So overall, our exposure in hospitality is to what you call sponsored private credit investment companies. And the fancy term simply means that these are companies that are either A, part of a large group of companies, or part of a group of companies that have private equity sponsorship, or part of a group of companies that has large individual shareholders with significant financial resources. And the reason why this is important is because during a crisis such as what we're having, those companies will typically have very strong executive management teams who know how to manage through a crisis. Two, as explained before, they also have the ability to inject new capital into the business. And three, because they're leaders, are market leaders in their various segments of the industry, it means that they will actually be looking to steal market share from their competitors by acquiring or expanding their footprint, which is what we are seeing with the majority of our portfolio.
And especially with the adventure tourism company that you mentioned. But you did have one hospitality player exit early. That was a $10.3 million exit. What happened there?
Okay, so the player did not exit early. What happened? We financed an acquisition in December 2019. That money was being held in escrow. And when COVID came, it made sense for the portfolio company to put those acquisition plans on hand because the actual acquisition had not been finalized as yet. And it also made sense for Sygnus Credit Investments to actually say, okay, this is beneficial to both of us. We got our interest payment up to the date when we exited, and they got the opportunity to go and negotiate that contract to get a cheaper multiple to do the acquisition. And once that acquisition comes back on the table, then obviously we'll also be there to provide the assistance that is required. So that $10.3 million exit, you could say that if we had still had that investment, would have been earning significant interest income on it, but we would have also had to be answering questions about why we have such a large exposure to hospitality, which obviously at the moment we don't have to.
Which is the same question I just asked you. So it's now down to 16% total for hospitality.
Yes.
That would have been a risk indeed. So Beris, what about some of the other companies outside of hospitality? How have they been faring through this crisis?
When the crisis started in April, one of the first things that we did as a private credit investment manager was to what you call look through your portfolio in a very granular way to effectively rank the companies to say, okay, if you're in hospitality, for example, you will be likely impacted, and how will we deal with this? If you are in energy distribution, the impact might come at a later stage or might not come at all. If you're in food distribution, the impact is different there, meaning you might have to increase your inventory to deal with the demand that you might face for basic goods and services. If you're in pharmaceutical, for example, the support that we would need would be different again to give you additional working capital to increase inventory to deal with the sales and demand that you would experience. So by doing that, we were able to then customize a strategic plan to match the needs of our portfolio. So what we have is a number of our companies, our investment companies, actually fare quite good. You know, we were really planning to see a second wave because we think worst case scenario when we are doing our analysis, and you know, we don't have a second wave. So you know, companies in energy, companies in in distribution and even some manufacturing businesses. You see Grace is throwing off record profits. Those companies has fared very strongly. And as Jason said, on the hospitality side, which got a pushback, the ones that we have invested in obviously had some challenges, but we are seeing where there are a number of green shoots in that sector. But majority of our companies have fared pretty well, and we are thankful that we didn't have a second wave. So right now, a lot of the businesses that we are working with are thinking about how do I look forward to growing in 2021 with the expectation that with vaccine and support, business activity will start picking up.
The last time you were on the program, Beris, you were able to boast that you had 0 non-performing loans. And I said, that's a great boast, but I don't know how long that's going to last. I noticed this time around, you had an issue with, I think it was a bauxite company. Because of the pandemic, they were closed down. What happened?
Right, so yeah, we were very proud of, and we remain very proud of the fact that our non-performing loans is quite low. So our non-performing investment, just to be precise, is 2.7%. That is well below the average in the financial services sector, which is typically around 5%. And our own target is 5%, so we are well below that. The particular non-performing investment that we had was impacted by the shutdown again of the bauxite and haulage industry because of the pandemic. Since the shutdown in April to August, that company or that sector has reopened, and this particular company actually start and has gotten a new contract to even do more work. So we are seeing that. I do not necessarily want to say things outside of context, but what we can say is that this business is starting to perform again, based on how we look at non-performing investment. Once the company continue to perform over a sustained period of time with the opening of the sector, then it's likely that that company will be moved out of non-performing. And maybe early next year, if we talk again, I might be able to boast again. But but anyway, the good thing though is that we have no bad debt, meaning in the sense of credit losses. So we have no investment that has gone bad to the point that we have to foreclose on it and have realized any credit loss. So that's a very important thing for us, because at the end of the day, when we talk about downside protection, we are very serious about being good stewards of investors' capital. And as a consequence, we really focus on making sure we choose the right businesses, we choose the right type of collateral, we have good collateral cover and the right structures that if something should go bad, we can protect
clearly you guys are very good pickers, because you have chosen companies that have proven to be resilient. As a matter of fact, looking at your prospectus and your last financial reports, both the audited and the audited up to June and the unaudited up to September, let me just read a couple of lines from it. Sygnus Credit Investments, this is for the audited ended June. Sygnus Credit Investments Limited reported record core revenues and core earnings and marginally lower than record net profits for the financial year ended June 30, 2020. And now for September 30, record core revenues again, and a 51% increase in net profits for the 3 months ended September 30. All of this during a pandemic. You guys are still setting records, and you're in an industry that has been severely affected. Other companies in financial services have not been seeing records at all. Many have been seeing losses. So how is it that you've managed to achieve these numbers in an industry where others are facing problems?
Yeah, the key to achieving good results and robustness in our portfolio and portfolio performance starts with the selection process. So we have a very strong selection process that will focus on fundamentally three things. One, who are we investing in, meaning the type of company and the nature and character of the owners of those business. Because at the end of the day, even if you invest to a business, you're really investing in individuals' credibility. So the owners and the type of entrepreneurs are very important. The second thing that we look at is what is the position of this company within their industry? Are they a leader? Do they have aspiration to be leader? Do they have unique product offering that will generate sustainable financial? And in that case, we say, okay, will they be able to pay us back? Meaning, are their financials sustainable? So we'll do some stress testing and support and decide on that. And then the final question we ask and have to answer is, okay, if worst case happen, do we have protection? And if you cover those three things in a very unbiased way, as we have a very robust risk management process, adjudication process that is independent of the executive of Sygnus. So our risk committee is independent. Then that allow them to ask those three questions in a very unbiased way and then make decisions. So that helps us to select and invest in good companies. The final point on this as well is that as a private credit investor, we also work very closely with the businesses that we invest in, meaning sometimes we might sit on the board of the company to help them to implement better strategic plans. And of course, we are always getting reports and interacting with our portfolio companies. So we are seeing all the early warnings long before other potential credit businesses.
Being a pioneer in this industry of private credit and specifically targeting the medium-sized entities, you guys have been able to be quite picky. You've been able to be selective in who you take on as clients, who you take on as investments in your portfolio. But in the past year, you've gotten some competition. I noticed that bigger players are entering the space. NCB Cap just launched Stratos. The SSL now has Delta Cap, and others are out there too, targeting the same clients that you are and potential investments that you are. How will this affect you, this competition? Do you see that you might not be able to be as picky in the future and as selective in being able to get those quality clients that give you the type of return that you've had, and the performance being the non-performing loans being very low?
So excellent observation. So one thing I would like to highlight is that we welcome the quote-unquote competition, because 2 or 3 years ago, when we were speaking about private credit, speaking about dry powder, nobody in the market knew what that was. So the fact that you're seeing both large and other type of players coming into the industry of alternative financing, whether that be different forms of alternative financing, not necessarily private credit, is very good, because what it does for the market to grow and for the market to get to what I believe is greater than $1 billion US market, we need mainstream players to actually come in. So in the same way that you have more than one bank in Jamaica, more than one supermarket, etc., at the end of the day, it's going to come down to track record and expertise and governance. And when you look at Sygnus Alternative Investment Platform, and specifically in this case, Sygnus Credit Investments, we have spent the last 3.5 years building up our track record, building up relationships. One of the things about Sygnus Credit Investments is that since inception, more than $50 million US, or more than half of all the new investments we have done, has actually been through existing partnerships that we have. So when we solve a complex problem for a client, because remember that we're not a bank, so we don't have a black box where we fit the client in. Effectively, we start with a blank sheet of paper and use our expertise at structuring and arranging and also putting in protections to ensure we don't lose investors' money. That is what is going to determine who will be best or better in the market. And our relationship that we have built across, the 7 Caribbean territories thus far, and the type of complex problems that we have solved for companies, we believe that we will remain the dominant force in the private credit investment market.
There's another change that happened over the past year or so too that also affects you. And I know this because when I was looking to incorporate Kalilah Reynolds Media, I said, Sygnus and Proven and all these guys, they register in St. Lucia. Maybe I should register in St. Lucia too, International Business Corporation. Let me look into that. But I found out that the laws have been substantially changed. And I know that existing companies who benefit from the tax benefits of being an IBC in St. Lucia, you get to keep those benefits for, I think, another year or two. So how exactly are you affected?
Well, I mean, the way we're affected is we have to pretty much pivot, and we have already started doing that by, for example, having a branch of the investment manager being set up in St. Lucia, so that our source income is not significantly impacted. The reason why Ike is not here right now is because he's actually elsewhere ensuring that this is being done. Of course, we also have an in-house tax advisory business. So we have seen this change coming for some time, and I've already put the necessary changes in place to mitigate against that on a go-forward basis.
Okay, so you don't expect your tax-exempt status to change?
As I said, we are already putting in place all of the measures. I don't want to speak because the laws have not exactly been defined or finalized as yet. So I don't want to say too much, save and accept that whatever the changes that will actually come in the future, we have already assessed what those changes are, and I've already started to put in place the measures for that, such as setting up, our business inside the country itself.
Okay, so tell me about this 20 million plus that you expect to raise. What's the profile of the companies that you're seeking to deploy this capital towards? Who do you want to invest in now? Just the profile? I know you can't tell me names, but what types of companies are you looking at?
Right, so I mean, the companies, we are seeing a lot of demand by very strong companies who are looking to do acquisitions, and I'm going to harp on that a lot. As I said before, that's one of the biggest things that we see happening in the market right now is companies looking to grow beyond the crisis who are acquiring other companies, both in Jamaica and across. Jamaican companies acquiring companies outside of Jamaica, other companies in other markets acquiring their competitors. So we have companies across the various industries that you would have seen us invested in, whether it's manufacturing, distribution, we have food services, we have companies that are in the construction industry, we have companies that are in renewable energy. So we have companies spanning a wide gamut and across many, many territories. But Jamaica being a very active market and the most active private capital market there is in the region, the demand by Jamaican companies and entrepreneurs who always have this motto of never let a crisis go to waste. We are seeing many entrepreneurs looking to do new projects, start new businesses under their existing umbrella, and therefore need flexible debt capital to actually combine with their own equity as well as with bank financing. And in many instances, Sygnus Credit is actually partnering with commercial banks to finance some of these transactions, which is a very important thing for us, because we are effectively not really competing with banks per se. We are actually increasing or widening the pie, and therefore many transactions that perhaps would not have gotten executed are actually being executed because Sygnus Capital's money, which resides in a different habitat than, say, corporate debt or bank lending, is actually able to come in and take that portion of medium risk to allow the transaction to be completed.
You know, it's impressive what you guys have been able to achieve in only 3 years since starting. And Beris, where do you see Sygnus in the next 10 years?
Of course, our big vision is to drive the velocity of economic growth using innovative financial solutions. And right now, we are on a path to build a legacy that will change forever, as I keep saying, the financial landscape in the Caribbean. And the particular sector that we are focused on is alternative investments. So we have established in 3 years a very robust alternative investment platform where we have Sygnus Credit Investment, obviously the one that we are talking about now, but we also have Sygnus Real Estate Finance, which is our real estate financing company, which is not a REIT, but deploy flexible capital again in the form of debt and equity into real estate projects. And we, of course, have Sygnus Deneb, which we co-manage with Sagicor, that invests equity capital either in the form of growth capital or buyouts into companies. So we have 3 distinct investment, let's call it subgroup, that comprise our platform and will help over the next 10 years to bring flexible capital, grow the alternative channel to, let me say, a mainstream alternative form of source to help businesses grow. So over the next 10 years, the job of Sygnus is to really build this industry to a point where, the industry, and when investors want capital, they can not only go to the traditional sources, but they feel very comfortable going to, private equity, private credit, real estate, and we might probably launch another type of fund. So that's what we want to achieve, a significant market that is helping businesses to grow. And at the end of the day, when you look at the Caribbean financial landscape, you are looking at something that you see in the US or Europe right now, where you have private equity, private credit, venture capital, you have the capital markets, you have the bank market. So our job is to really grow our business and grow that channel over the next 10 years.
Well, I wish you guys all the best with the APO and beyond. Thanks, Beris. Thanks, Jason.
Yeah, thank you very much, Kalilah.
And stay tuned. Beris and Jason will be joining us live on YouTube and Instagram immediately after this episode to answer all your questions. Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 100 stocks traded across both the main and junior markets of the JC for the week ending Friday, December 11, 2020. 42 advanced, 49 declined, and 9 stayed the same. Nearly 157 million shares changed hands on the Jamaican dollar market, totaling nearly $479 million. Mailpack Group traded the most, taking up nearly 39% of market volume. The stock gained 27 cents to open the week at $2.45. Trans-Jamaican Highway traded the second highest, with people buying and selling 34 million shares in the company. The stock gained 1 cent to open the week at $1.29. QWI Investments rounded out the most traded, taking up nearly 14% of market volume. The stock lost 2 cents to open the week at 73 cents. Now let's see who had the biggest gains. Siboney Group jumped a whopping 57% to close last week at 22 cents. ISP Finance Services rose 35% to close last week at $22.97. And the CAC 2000 9.5% cumulative redeemable preference share stock advanced to nearly 18% to open this week at $1.14. On the losing side now, 1834 Investments fell 16% to close last week at 82 cents. Mayberry Investments fell 15% to end last week at $5.70 a share. and Key Insurance lost nearly 14%, down to $8.10. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Ideal Portfolio Services. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by wealth advisor at Ideal Portfolio Services, Dwayne Taylor, and research and strategy analyst at Sagicor Investments, Jodian Aris. Hi, Jodian. Hi, Dwayne. Welcome back to Taking Stock.
Hi, Kalilah.
So the hot ticket on the market this week is Sygnus Credit Investments. Their APO is finally out. The prospectus is out. Dwayne, have you had a chance to look at it yet?
Yes, I have, and it's very interesting. I think it's one of the highly anticipated APOs or just offerings for 2020. Just to get into a bit of detail about it, they're essentially looking to raise 22 million US. They're doing that through offering it to regular shareholders. I believe at a price of 14 cents US for the US stocks, and also at Jamaican of $16.30 per share. So it's pretty exciting. It's a good price for individuals. I think it's slightly below market. They normally are, but it's one that we've been looking forward to from I think the announcement from last year, essentially.
The announcement coming with this offer, and COVID kind of derailed that, and it's finally here.
Exactly. I know that they will be looking to raise some capital from then. So it's good to see it finally launching. And remember, we also get excited about the fact that they are a unique brand as well. Alternative investments is relatively new in our market. So we're excited to see how they use the funds. I know in the prospectus, they had detailed that they would be looking to fund a lot of small to medium-sized entities in terms of their line of, offering them funds to advance their projects. So we're excited to see how that turns out, what companies they've targeted, and how it will impact not only their business, but the companies that they're partnering with. So very excited for this offering.
Now, Jodian, I know Sagicor Investments are co-brokers on this APO. What can you tell me about your position so far? It's very early still.
Yes, so Sagicor Investments is co-brokers on the deal. Thus far, I think, when you look at the track records, Sygnus being a new company that listed in 2018, they were just 6 months in. They have done pretty well. I mean, they have been able to weather the storm thus far. One of the great things with alternative investments, or how it is that the structure is that they're big on risk management and their ability to, do restructuring. So definitely their ability to manage the risk is very good. We have seen that thus far, even with just the start of COVID, and their ability to restructure deals or to exit early and to plan ahead is really, really good. So even though there is some risk that is present with the alternative investment market, we still are very positive on Sygnus just based on their track record and their performance thus far.
Here in Jamaica isn't the only place that we're seeing a resurgence of stuff on the market. So the United States had 2 APOs last week. They had Airbnb and DoorDash. Airbnb is really interesting, Dwayne, because as you know, they would have been severely affected by the pandemic. But post-IPO, they had a really good week. Tell me what happened.
So that one, Airbnb, another highly anticipated IPO in the US market. So they came out, the price that they had projected was actually 68, but it came out at more than double the price. So it actually came out at 146 onto the market, which is big news. It's a big deal for investors.
Meaning that's where it started trading.
That's where it started trading on the market.
What was the IPO price?
$68.
The IPO price was 68 and it started trading at 140 something.
146 to be exact.
Wow.
Yeah.
So if you got in on the IPO, you made more than 100% return in a
pretty much, yes. So it was I mean, it was highly anticipated, as I had mentioned, and they pretty much more than achieved what it is that they set out for. They were actually looking to offer roughly about 50 million shares to being sold by their entity, and there are another private set of investors, or stockholders, I should say, that were selling about 1.3 million. So all of that was filled up. They got the price that they wanted, and right now investors would be very pleased with what they're receiving. It's important to note that with Airbnb, they're unique in the market, because the reality is the hotel and even just the industry where persons are looking to stay at different resorts or places had been severely impacted due to COVID. But given the green light on the vaccines that have been approved, not only in Europe, but also in the US, I think as early as last night, Pfizer was given a green light to give out the vaccine. That has impacted persons' perception and outlook on even a stock like Airbnb. So even though it has already doubled in price, there is speculation, or at least anticipation, for it to grow even further on the stock market. So the market has responded extremely well to it, and they still see more room for growth in that stock.
And people can contact you there at Ideal Portfolio Services for investments in Airbnb.
Absolutely. Yes, if you're interested. Yes.
Mm-hmm.
Yes.
Coming back home, Jodian, there is good news on the economic front. Standard & Poor's has given some indication that they have confidence in Jamaica. They've affirmed our credit rating. What does this mean for us?
It's pretty good news. I mean, the worst being that they would have downgraded us, but they have affirmed. So they're still saying that, basically what they're seeing is within expectation within a COVID market, and the outlook going forward is that, it's very likely that we'll be able to, hit, even though we're going to have some bumps along the road, that we'll be able to recover and do well, by 2022, 2023. I mean, they still have concerns in relation to, we still have a high debt, even though we have been bringing it down, but it's still a concern in terms of the high debt and interest payments and how that affects, the government's flexibility to do things and, to respond within a market like this. However, on the good side is that we have had 3 years of fiscal surpluses. And fiscal surplus is really if it is that the government tax revenues exceed the expenditure. And because they have had 3 years, the government was able to increase spending in areas that were needed because of COVID, such as healthcare, and also to do the cash transfers that they did earlier this year. And I hear the minister speaking that there should be one coming for Christmas. So because of, the good performance in the past 3 years, they were able to afford that. However, going forward for this year, it is expected that we're going to record a deficit just based on the fact that revenues are down and expenditures increase. As you can imagine, with tourism being such a big importer and not importing, that the tax that government would have earned on those imports as well as travel tax would have been severely down. So it's still a bumpy road going forward, but it's expected that as tourism improves, there will be a pickup and things will, progressively return to greater economic strengths, similar to what it was pre-COVID.
Overall, I'd say it's been a pretty good week, both here in Jamaica and abroad.
It has been.
Yes, I guess it's Christmas early. Yes. You're welcome.
Yes. Thanks, Dwayne.
Yes.
Alrighty.
This segment of Taking Stock, The Analysts, was brought to you by Ideal Portfolio Services. And don't forget to join our live Q&A with Berisford and Jason from Sygnus Credit Investments immediately after this episode. Click the link up here or in the description below. They'll be answering all your questions. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilahReynolds.com and turn on those post notifications so that you can be the first to see all of my other features. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, we're talking investment strategies. What do you do if you bought a stock for a high price but now the price has fallen. On Money Moves JA, we're looking at cybersecurity for your small business. It's more important now than ever. And What's in It for Me is back this week. We zoom in on the Financial Investigations Division. Follow me on Instagram and Twitter at Kalilah Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analyst this week, check the description box below for their contact information. Also visit our website, KalilahReynolds.com, for financial news you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalilah Reynolds. Stay safe.